Enjoy the ride with Crystal Petrie Consulting. So inspired.
Hello, my name is Crystal Petrie. Thank you so much for joining me on another episode of my podcast, 60 Minutes With. Today we are going to learn about and talk about something that probably most people don't want to learn about and don't want to talk about, and that's taxes. Yes, you heard me correctly. Today we are learning all about taxes, and here to educate me and you, we have Miss Karen Prater Young.
Hi, thank you for having me.
Thank you so much. Listen, Miss Young, thank you so much for agreeing to be on my podcast and talk about taxes.
Yes, ma'am.
So Marcus Castile referred you to me, and he just said that you are amazing and great at taxes. So when I reached out and spoke to you, one of the things that stuck out to me that you said was, I find taxes fascinating. Mm-hmm. And I thought, said no one. No one says that I find taxes fascinating. But here you are, Ms. Young, here you are.
Yes, taxes are fascinating.
Mm-hmm.
I think once you understand our tax system and how it works and how there are things legally that you can do to benefit yourself, your business, or whatever, you'll probably feel a little better about it. You may not necessarily want to pay taxes, but
Yes.
taxes help run and function and fund things that we use every day that we probably don't really think about how it's paid for. But your roads are paid for with tax dollars, and just some anonymities that we take for granted
Okay.
and we just don't give it thought, but it's paid for.
So
through our
what
taxes.
are a few of the other things that our taxes pay for? It might make us feel better about paying taxes.
Education.
Public education. So we have roads, public education for your children, your grandchildren, nieces or nephews. Okay, what else do we have?
And construction work, jobs, all that comes through the funding of taxes. But let me just say this too, Ms. Petrie.
Okay.
Now, the information that I'm giving is not to be accepted as tax or legal advice. I am educating people about things that I've experienced in 32 years. So I'm going to always say, consult with your tax advisor, your CPA. The Internal Revenue Service has a wealth of knowledge on their website.
Okay.
Yes, it can be overwhelming. So you could always call them and get information, or the Taxpayer Advocate's Office. I mean, there's just so many places you can get information. But what I'm providing today cannot be accepted as this is what I do, this is what I do, this is what I do. Yes, consult with your personal tax professional or your CPA or tax advisor.
Thank you so much for those terms and conditions. Ms. Young, thank you so much for that. So before we started this podcast, I was asking if you were a CPA. And so you said you are an accountant, which I said I did not know that accountants do taxes.
Yes. So I do need to tell you, accountant in the accounting field, it's vast. Taxes is one of the areas in the accounting profession.
Okay.
A CPA is a certified public accountant, which means that person has at least a bachelor's in accounting, and they have sat to take an extensive state exam to be licensed as a CPA. An accountant still can do taxes. You have received the same type of education as a CPA. The difference is you didn't sit to take the CPA exam. Tax professionals can be accountants, or they can be persons that have taken courses through H&R Block or Jackson Hewitt, some of those entities that teach you how to do taxes. And what they do from there is decide whether they want to take continuing education that the Internal Revenue Service offers. Is an annual refresher course that they can take, but it's strictly voluntary. It hadn't always been that way over the course of 32 years, because the objective is for a tax professional to not deceive or mislead the consumer. So it's just like anything else, any other service that's offered. The consumers are paying you to be knowledgeable of the service you're providing, and they're expecting for you to do the right thing on their taxes.
Right.
And so this advice I do give: before, if you don't have a tax professional, establish a relationship with a tax professional, CPA, or tax accountant or advisor. But also ask those questions. Ask up front, what are your fees? Are you available in the off season? If a problem arises with my tax return, are you available to assist me? Those are just a few questions that to consider, to strongly consider. The industry, like I said, it's vast, and I've been doing this for 32 years, and I've seen quite a bit in 32 years, and sometimes it's just an opportunity for people to make just a quick, they treat it like a gig opportunity, and that's why they're doing taxes. It's just something to do during the season so I can make some extra money. Yes, it's a good source of extra money, but if rules are not followed and the procedures according to the IRS tax code are not completed, then that's doing harm to the general public.
So let me ask you this question, Ms. Karen. How is it that, and we've all seen them, I know I see them all the time, they're all over social media, you have people that pop up during tax season
Yes.
that offer to do taxes, but they're not CPAs, they're not accountants, but they do taxes. How is that possible? Is that legal?
They are tax professionals, could have received their continuing education through H&R Block or through Intuit or through Jackson Hewitt or any other entity or private tax company that will teach a tax course. And so that individual will pay for the education, and then they begin to do the taxes. But it's incumbent upon them to continue taking classes, because taxes change. As tax laws are written by Congress and they're signed by the president into law, well, it's law. So that can change at any given time. So tax is so wide and so vast, and it's ever changing. You have to stay updated. And at times, it may be an area of taxation, because you're not doing it every day. You may need to do some research, and the tax professional or CPA, whoever it may be, the consumer can't be afraid of a person telling you up front, hey, let me do some research with that, because I need to be sure to verify exactly what the changes are, how they're executed and implemented. That's a win-win.
Right.
When a person tells you that they have to do that. I think it's an alarm when a person says, oh, that's all right, it's okay. You just go ahead and do it. That says to me
Definite red flag.
It's a red flag. It can be deemed as a red flag. And so I'm finding in our industry that there are quite a few that are not, because it's not required by IRS. It's strictly voluntary to participate in an annual refresher course for tax professionals. And those are persons that are not CPAs or do not have an enrolled agent status with the Internal Revenue Service. Now, enrolled agent status with Internal Revenue Service gives you representation rights for the consumer, or the tax returns that you've prepared and those that you have not prepared, like that of a CPA.
Let's talk about something that you mentioned earlier, which I feel like most people probably don't know how the tax code is written and passed and how it affects them. And you stated that Congress, they write the tax law, or they write the tax code?
They write laws.
Okay.
Congress write laws for our country. And the
Yes.
president signs the bills
Okay.
into law. Congress write bills and the president signs, to keep it simple, signs those bills into law.
Right, and that is taxes also. So your
Yes.
congressman is writing the tax codes,
Writing tax
so
bill, tax bill.
tax bill. So why do I hear people refer to it as tax code?
Because tax codes are the rules. So what
Okay.
IRS does, once Congress writes the bills, president signs them into law, then it's up to the Internal Revenue Service to implement the law that has been written. So they establish codes, which is just procedures to say, this is step one, this is step two, this is step three. If this condition happens, this situation, this is how this law needs to be applied to this
Okay.
situation.
So our congressmen that we vote into office, they write the tax law. And then they send it to the president. The president signs it into law. Then that tax law goes to the IRS and they turn it into the code and the implementation of it.
Right.
Okay, I did not know that.
Yeah.
I did not. And you know, the crazy thing about that is I never even thought about it.
Yeah.
I just
Most people
accepted
don't.
it. Yes. I just accepted it as this is what it is.
Now that's the most simplified.
Keep it simple.
Yeah.
Keep it simple, Miss
That's the
Karen.
most simplified
Yes.
way to explain it, but you know, it's a little bit more involved
I'm sure it is.
than that.
Yes.
But that's just to keep it.
Okay, so explain to me the difference, and this is me assuming there is a difference, between federal, state, and local taxes.
So federal taxes is what everyone is required to file based on certain standards. That's your 1040s. That's your 1120s, your individual and your business tax returns. Let's just say it like that.
Okay.
That's your quarterly tax, taxes that businesses file, the payroll taxes. State taxes, for some states, they have a state income tax, which is similar to the federal income tax. The state of Texas, of course, does not have a state income tax. However, when you are conducting business in the state of Texas, just like any other state, there are certain requirements for conducting business within the state that the state requires you to pay. So if you're a certain type business, meaning you filed for an LLC, and that's different from a sole proprietorship. A sole proprietorship has a DBA, whatever your state requirements are, but that's normally a person, that's an individual, that their business is not separate from who they are. So for federal reasons, that person is identified as a sole proprietor. So that business is a part of their 1040.
Okay.
If the person decides, no, I want some legal protection of some sort, then I can file my business as an LLC. a limited liability company.
And these are all like under federal taxes, not local or
This
state.
is all state.
Oh, this is state.
This is state.
Okay.
So as a limited liability company, that's a company that says, I'm a sole proprietor, or it's individually owned, and I want this company to have some legal protection, which means I want to be recognized as a legal entity. So when that person accepts the filing through the state, whatever the state requirements are, to file for a limited liability company, even a sole proprietorship, the state has some requirements to declare, this is my business. S corporation, which is a sub-corporation, a partnership, or a corporation, those are initial filings that are done with the state.
Okay.
Okay? And then the person applies for what's called an employer identification number.
And all of this has to do with federal, local, and state tax?
Yes, this is how it
Wow.
transcends.
Okay.
So, when you apply for the employer identification number,
The EIN.
the EIN, you decide how you want to be taxed. Of course, the sole proprietor is not separate from the owner. So IRS is really clear. You are taxed as an individual, a Schedule C filer. So your tax return, your business is a part of your individual tax return. An LLC is a disregarded entity, which means it can be taxed however it wants to be taxed. So if the owner, it can be a single-membered LLC, it can be a partnership LLC, that means multiple-membered LLC. The LLC needs to decide how do you want to be taxed. Now, it still has a separate legal entity to some degree, which means it protects your personal assets to some degree if a person should sue you. But as far as taxation reasons are concerned, the LLC can be taxed as a sole proprietorship, or it can be taxed as an S corporation, which means the S corporation is a separate entity, a separate person from the owner of the business. So then the owner of the business, if it's taxed as an S corporation, that person becomes a member, a shareholder. And of course, a corporation is a separate entity on its own, which means when I say that, if it's taxed as an S corporation or corporation, being individuals on their own or their own entities, they file their own tax returns.
Okay. And how does this apply? Okay, so what does federal, state, and local taxes, how does that, I guess, apply to just your regular individual that does not own a company, they don't have an LLC or an S corporation or anything like that? They just go to work, Monday through Friday, 9 to 5, and then come home.
Okay, so with federal taxes, that goes back to some of these anonymities
Okay.
that we have, that we enjoy. When an individual files their personal tax return, they may get a refund, or they may owe taxes. They get a refund, and that's money that goes back into the economy to purchase goods and services.
Okay.
On a state level, regardless of if you're LLC, you would pay franchise taxes. If, depending upon the nature of goods and services.
Is that the FICA tax? The
No,
franchise?
that's not FICA.
Okay, go ahead.
That's a separate state tax altogether
Okay.
for certain businesses. Well, not certain businesses, but it's goods and services that are sold within the state. And if you meet and your sales meet or exceed a certain threshold, then that's another tax that you pay,
Okay.
that business will pay. Everyone pays sales tax. So when you go to the store for goods and services, you pay sales tax on certain things. Non-profits may not pay for sales tax, they're tax exempt. Or if you are let's say an e-commerce business, and or just an example, but there are some others, and you purchase goods or services that are part of your end product, when you make the initial purchase, you don't pay sales tax on that. You collect sales tax on the end product.
Okay.
For example, restaurants, when they buy their goods and services, their goods, which is produce or meat, at the time of purchase, they don't pay sales tax. And this is in the state of Texas.
Mhm.
But when they get ready to present that end product that we love and we buy, that's when they collect the sales tax. When they collect the sales tax, they are collecting the sales tax for the state of Texas, because we live in Texas, but it's like that in any other place too. And you remit that payment, that sales tax that you've collected, to the state
Okay.
every quarter or monthly. And that's based on your gross sales.
Okay, so what about local taxes for our average Joe or Josephine?
Well, if they don't own a home, we all know about property taxes for the local taxes. But even sales tax that the state collect, that businesses collect, and that individuals pay for goods and services, because businesses are made up of individuals. So when they make purchases and they pay sales tax, that still helps our local economy.
Okay. And just so we're all clear, if you own a home or you're in the process of owning your home, you pay property tax.
You pay property taxes.
And those property taxes go, I know a lot of it, I don't know what the percentage is, but a percentage of it goes to the public school districts, as you were stating or talking about earlier, correct?
Correct. And it also helps to fund our local government. So when you asked originally, how does it work with federal, state, and local, there's federal funding that comes through our Department of Transportation and so many other things. Funding comes from the federal that trickles down to our state, that trickles down to our local governments.
Okay.
So we all play a part in how we enjoy these anonymities, that we don't really think about the funding.
But it sounds like the majority of the funding stems from taxes.
It does.
It stems from taxes. Let's talk about tax brackets, something we hear a lot about, especially during election season, tax brackets. So, we hear a lot about the 1% tax bracket, the middle class, the upper middle class, these different brackets. So explain to us, keep it simple, about these tax brackets, and why is that even important? Why should we even care?
Tax brackets, when we hear about the 1% paying less in taxes, that's a high income earners. And then we hear about the middle class that falls within a certain income bracket, and they pay the most in taxes. And then we hear about the lower income bracket, but that comes back to your earnings. So how much money do you earn annually determines, your gross earning determines what income bracket you fall in.
And the gross earnings, that's the money you make before they take your taxes.
Before they take the taxes,
Okay.
yes ma'am. Everyone pays Social Security and Medicare, which is FICA.
Okay.
Everyone pays that. If you work, you can be exempt if you're a student, you make under a certain amount of money. Just trying to really keep it simple.
Yes.
But for the most part, let's say you make $1,000 a year. And you're gonna pay Social Security taxes, is gonna be withheld from that $1,000. The percentage combined is 0.0765. Social Security specifically is 0.0620, and Medicare is 0.0145.
Okay.
Federal withholdings, of course, because you're within a certain range, you won't have any federal tax withholdings unless you choose with the completion of your W-4 that you want to have extra withholdings taken from your pay. And that we're talking about that W-4 is critical, and a lot of times, because it's changed in 2020, before it was, okay, I got 0 exemptions, I got 5 exemptions. So the more exemptions you had, the more money you took home in your net pay.
Okay.
So your gross earnings is what do you make per hour? Whatever the number of hours times your hourly rate or your salary, that's your gross. And then once the taxes are come out, and then of course like retirement, if you have a retirement saving plan at your job and some other things, then it's your net pay. Your net pay is what you take home, but that's after taxes. And there's some other things in there that's just, that you can have taken out that's just dependent upon the employee and how things are set. So it's not just, there's some things like the cafeteria plan to consider, that we don't need to go into.
Okay.
Within this hour, we'll run out of time. But just to keep it really simple, that your gross pay and your net pay are after taxes are taken out. Every person has, when they file a tax return, you have a standard deduction, or you have the opportunity to do other tax deductions, such as itemized deductions.
Okay.
But if you don't qualify to itemize, then you take a standard. Everyone has a standard, and that's...
Can you have both? Can you do both, the standard and the itemized?
No, you cannot.
Okay, you have to pick.
You have to pick.
Okay.
And normally you are able to choose which one is going to get you the largest deduction. And when I say deduction, that's to reduce your taxable income. So that's your gross wages that you see on your W-2, box 1. If you've earned interest in a savings account or checking account, you've earned dividends from investments, all of that is added together to create your taxable income, just to keep it really simple.
Okay.
And there's quite a few things in there that's encompassed in that. And then your standard deduction is set by your filing status. So this year, if you were single, it was $13,850. And I forget what it was, if it said a household, married, filing jointly, I think it was $24,900, or might have been $27,500.
Okay.
Wait, let me see.
Yes. Yes.
Off the top of my head.
So as you are looking for that, as I'm understanding it, the tax bracket that you fall in is it based on your gross income, or is it based on your net income?
It's based on your taxable income.
Okay, so that would be gross.
No,
Before, okay.
no, your taxable income, that's all of your gross.
Right.
That's all of, but that's gross. When you say gross, that's earnings that you work for.
Yes.
And I say gross income.
Yes.
But then there's other income like interest and dividends. You didn't actually work for that,
Oh, yes.
but you earned it. So
right.
the term probably would be better, earned
Income.
Yeah.
Okay. And then depending on your earned income, that's how you know, and I guess the federal government knows, which tax bracket to put you in.
That you automatically fall into.
Okay, so you automatically fall into that. So they
Based on
already
your
have it.
earnings, right.
Okay.
It's already set up within that tax code. So when you file the tax return, And most people use software to do it.
Yes.
But if you're doing it by hand, there are resources and charts that's on the Internal Revenue Service site. I want to say Publication 15 is a critical one. Publication 17 is a wonderful one as well. That explains the filing statuses, who's a dependent, who's not a dependent, any updated changes to the tax law. Publication 17 is wonderful for people to begin with that want to do things on their own. Publication 15, of course, is the tax publication. It gives you the tax rates and the tax charts, and the IRS website is a wonderful source.
Said no one, Miss Karen. Said no one, Miss Karen. But here you are. Here you are.
So this is going to be for this upcoming year. So
For 2025?
For 2025. You will actually be filing in 2025, but you will be filing the tax return for 2024.
Yes.
Filing status for single or married filing separate is going to be $14,600. That's going to be deducted from your taxable income. So your total household income, automatically, if you're single, you'll get to deduct $14,600. If you're married filing jointly, or a surviving spouse, or your spouse has passed away, or whatever, it'll be $29,200. Head of household will be $21,900. And of course, if you're over 65 or you're blind, there's an additional amount that you apply to these categories. So an additional amount could be, I think it was average like $1,300, give or take, that you would add to these standard deductions. That you would be able to add to.
What happens if someone pays their taxes late?
Well, there's a penalty. So when you file an extension, business returns are due, and when I say business returns, I mean S corporations and corporation tax returns and partnerships. And that reminds me too, an LLC that's more, that has multiple members can be taxed when applying for EIN. As a partnership, it can choose to be taxed as a S corporation or corporation. But those returns are due by March 15th. If you know that there are taxes that are due that you could possibly owe, it's an extension to file the tax return but not pay.
So what's the point of the extension?
So that you can file to see, get the final numbers for filing purposes. But you're to estimate if you think you owe taxes. Now that's for businesses. Individual is April 15th. And if you think you're going to owe taxes, then you are to look at the previous year and estimate based on the previous year's tax liability that you had to pay, and you are to send in that portion of money with the extension. The extension is only to file the tax return.
I thought the extension this entire time was for the pay, that I can like extend when I can pay from April 15th to maybe June.
No ma'am, no ma'am. It's just to file the tax return.
So what happens if you pay late?
If you pay late, then there is a penalty.
Financial penalty.
Oh yes,
Okay.
Financial penalty for paying late, and it starts at 0.5% up to 25% of the unpaid balance. And then there's interest that accumulates daily until it's paid in full.
Really?
Yes.
Oh my goodness.
The extension for businesses filing an extension March 15th. That extension extends to September 15th for individuals. That's an upcoming date of October 15th. Now,
Okay.
there's an extension that, and those are automatic, those extensions. You request them, you get them. There are circumstances, of course, if a person works overseas, or if they're in the military, then there's some automatic extensions that are given to them. That's different from individuals, like an additional 2 months given to a military person. You also, an individual can request additional time outside of the automatic extension, a 6-month extension given, but you have to have a really strong reason, valid reason. And I do need to say, because we just recently had Hurricane Beryl in July, and there were some damages and things done. When that happens, a natural disaster, IRS sometimes will give extensions. So for those counties that were affected by Hurricane Beryl, the extension not to pay, is to file. Those persons have until January of 2025.
You spoke about in great detail, thank you, about the differences between the LLC, the S corporation, so proprietorship. What are some of the tax benefits for small businesses? Now, before you answer that question, what constitutes as a small business according to the IRS? Is it based on how many people work there?
No.
How much money you make? I'm just guessing here. I'm guessing here.
To keep it relatively simple,
Yes.
it's your intent. Are you doing this as a hobby?
Okay.
Or do you go into business to make money, to make a profit? Well, not to make money, but to make a profit. What's the intent? And so your business deductions have to be ordinary, just normal in the operation of this particular business, but they have to be necessary. Is it necessary for your business?
Okay.
Is the critical part. Is it necessary? Ordinary and necessary expenses are what you can deduct.
And that constitutes a small business, all of those things.
Well, a small business is when you decide a small business can be an S corporation. What do you, I mean, you can have a small business and not have employees.
Okay.
You can be a sole proprietor. You can have a lawn service, a thriving lawn service, and you're the only person that do the work. That's still considered a small business. You could have 300 employees. During COVID, small businesses were identified for some of the COVID business resources that were available, was up to 500 persons, to include places like restaurants, but still your mom and pop entities that were suffering or had to close because of COVID, of the COVID shutdown.
Well, I'm thinking, because for me, I was wondering if a small business like Black and White, you have X number of employees, that's a small business. But it sounds like a small business is your intent and situational.
No, business, period. If you have a business, to
Yes.
determine whether you have a business or a hobby, it's your intent. Are you just doing this because you like doing this? For instance, gig work. There are persons who actually do e-commerce, and it started during COVID, selling clothing on Poshmark or other entities like that, to just name one of the entities. That was only for a hobby. But there are actually small business e-commerce. That means you do online sales. That's just what you do. So you're selling things online in order to make a profit. You're not doing it just because.
Right, right.
So it's your initial intent for establishing the business. Or you want to do this as a hobby, or you're doing it as a business.
And that constitutes a small business or not.
That constitutes whether you're in business or not. It's your intent. A small business, if you're wanting people and number of bodies, a small business is 500 or less.
That's a small business, 500 people.
But that's employees.
Yes.
I'm a small business and I don't have any employees.
I feel like 500 employees is a lot. Like, that shouldn't be a small business.
Yeah. But you have corporations that have thousands of persons.
Yes.
So I think it's just important. It's not so much of the number of employees that you have. Yes, that's one of the things to determine if you are, I guess if you're classifying a small business or a corporation.
Yes.
But really business is the intent. What is your intent to determine if this is a hobby or if this is a business? Now, of course, if you're paying one employee and you're paying payroll taxes, surely I hope you're in business. And it's not just a hobby.
Right.
Also, really.
Yeah.
So definitely, if I just had to give you a number, if you're paying payroll taxes, one person, you're a business.
Your business. What are some of the tax breaks or tax benefits for owning a small business?
Again, it depends on how you choose for your business to be taxed. So besides the expenses, and you get to deduct expenses that are ordinary and necessary to run your business. That would be payroll taxes, that would be your goods that you're selling, that would be insurance, that would be mileage if you travel, where if you pay commercial space, that's rent. It's pretty vast. But the biggest thing is that it's ordinary, which means it's necessary to operate your business. And it's a normal business cost for your industry and your type of business that you're in.
It sounds to me like a lot of the tax code is very subjective.
It is.
Yeah. And I don't know, is that a good thing for the person that's paying the taxes? Or is that a bad thing? Because for me, ordinary and necessary might not be what the IRS or the accountant considers ordinary and necessary.
But that's where that code comes in with the IRS. The IRS has specific rules that lays out what is an ordinary and necessary operation and function of a business. That's where you really need to consult a tax professional, CPA, tax accountant that is familiar and that stays abreast, continues to take continuing education so that it's not subjected to the taxpayer. Sure, the taxpayer may think, well, for example, I have a Schedule C. I'm a sole proprietor or I'm an LLC, but I'm choosing, if I'm an LLC, to be taxed as a Schedule C, like I'm a sole proprietor. Getting in my car, going to my office, for example, to me, that's a tax deduction.
I agree.
But it's not.
What?
It's not. That's no different than you getting in your car and going to your W-2 job. IRS is not going to give you a tax deduction for
I
that.
I understand.
So when you're self-employed, and that's what we normally say, self-employed, a sole proprietor, you choosing to go to a building, a commercial building, to work, is not a tax deduction.
I understand.
But we think about it because I'm in business for myself. You think, okay, that's a tax deduction, but it's not. When you are a sole proprietor, you're in essence, because the business doesn't separate from you as an individual, you're the employer and you're the employee. And I mean, because it's you. So those things that you normally would do for a W-2, leaving your house, going to that place of work, that's not a tax deduction for you. And also the other area that tends to be subjective on behalf of the taxpayer and sometimes from the person that prepares the return, it gets confusing, is meals. So you're choosing to go to your sole proprietor, you're going to lunch, and you come back because you went to buy you lunch. That's not a tax deduction.
What if, because I've heard of this, you go to lunch with someone for business purposes?
That's a tax deduction.
Okay.
For business reasons, you're sitting down, you're discussing business or a contract or some type of, you're in a management role where you're discussing the possibility of an income earning possibility.
Yes.
Yes, that would be a meal, but there's restrictions on how much of that meal you can deduct.
Okay.
So, and there's publications when if a person is just starting out, or even if you've been in business for a while, because again, tax laws change, they're updated. So, getting familiar with irs.gov is a wonderful resource. It's there. And pulling those publications and studying the changes that are taking place or that have taken place that apply to your business is a wonderful place to start.
Okay, Ms. Karen, we have talked about, and when I say we, I mean you, have talked about income tax and payroll tax separately. What is the difference between income tax and payroll tax?
Income tax is paid by all individuals. Payroll taxes are paid by the employer. So for that W-2 earner, their employer pays payroll taxes.
Okay.
So when you get that W-2 earner has FICA or federal withholdings withheld and from their paycheck, the employer has to match the FICA, the Social Security, and the Medicare. So they match that. Plus, since they're collecting the federal tax withholdings, they're collecting that, and every quarter they are turning that money into the Internal Revenue Service. Now, depending upon what's called a look-back period, meaning what was the business's payroll tax liability in a year or 2 years, if you look back, IRS may say, well, hey, you have to make federal deposits, and those deposits are the taxes that they collect. So once they pay employees, they withhold that money from your paycheck, and they match that amount that they've withheld, except for the federal tax withholdings. They either have to make a deposit semi-weekly or monthly or quarterly. So they'll make those deposits, and at the end of every quarter, so at the month following the end of every quarter is the way I should say it, by the end of the month. So like the first quarter, January, February, March is the first quarter. The first quarterly payroll report is due at the end of April. Then hopefully they've made all the deposits the business has, and then they just file the paperwork.
Okay.
So again, it's not a delay in paying the taxes.
You know,
It is to file the paperwork
yes.
and 30 days after the quarter ends.
So let me make sure I have this correct. Income tax is something we all pay if you have a job. You have a job, you pay income tax.
Or if you're self-employed, or if you have an S corporation or a corporation. I'll get into that a little bit.
You pay income tax. And so you pay income tax to your employer. Your employer matches what they receive in income tax.
You don't pay it to the employer, it's withheld
Okay.
from your check. So
Perfect.
basically your
Perfect.
employer is
Withholding
withholding
the income tax.
the federal tax withholdings that you choose and the Social Security and Medicare, as you referenced earlier, as FICA.
Mhm.
That's withheld. And then your employer matches the FICA. And then that collection of dollars and with the matching is
The payroll.
the payroll tax that is deposited either semi-monthly, or it might be weekly or monthly or quarterly.
Let's talk about online sales tax. I
Mhm.
remember, this was years ago, I don't know how many years ago, but when like online sales, specifically Amazon,
Okay.
first became like a huge, okay, this thing is not going away. It was a huge deal in court on the sales tax
Yes.
because they were trying to figure out, do you charge the consumer sales tax based on where they live, like where the sale is coming from,
Mhm.
or do you charge them sales tax based on where the company is, like what state the company is in? So explain to us the online sales tax situation.
So that's e-commerce.
Okay.
That's what that's called. And there is a nexus. And nexus is a system, a sales tax system that's established for online sales or cross U.S. line sales. If you meet that state's certain sales threshold, then the owner of the company, of the goods and services,
So Amazon or Etsy.
or if you sell through Amazon, Etsy, that's your sole proprietor, that's your LLC. That can even be your S corporation if they're in sales, or your corporation. If you're selling a goods and service, a product through these entities, then, and you meet that certain threshold
Of sales.
of sales
How much money you
for
made.
that state,
Okay.
how much gross you made,
Okay.
then you have to remit to that state the sales tax.
Okay. So the state that you are in, where your
The
company.
state you're in, if you sell within, for Texas,
Okay.
if you sell within the state of Texas, and it gets tricky because it's within the county.
Okay.
You asked about local taxes and
Yes.
here how that handles, goes. And you sell within the county, you are to charge sales tax. If you sell in Chambers County, whatever that tax rate is, that local tax, sales tax rate, that's the rate you're to charge. If you ship outside of the state of Texas, for example, you don't charge sales tax on that, or your sales outside of the state of Texas.
Mhm.
Because the seller, if they, let's say for instance, they're selling in Louisiana, just to give you an example.
Right.
If they meet the sales tax threshold in the state of Louisiana, yes, their business is operating in Texas. But if your sales meet the sales threshold, that whatever that dollar amount is, that seller in Texas has to remit, whether they've collected the sales on the product or service or not, they have to pay the sales tax to the state of Louisiana. They will be required to get a sales tax permit to say that I am selling goods and services in your state.
Okay, first of all, Ms. Karen, my mind is blown. I had no idea about any of this stuff. Okay, so what if, and we're gonna keep your example, you're living in Texas, but you sell to Louisiana, you sell to multiple states, and you meet the threshold in multiple states.
Then you pay those multiple states.
You pay those multiple states.
And you have to have permits in those multiple states
Mhm.
and meet other state requirements.
Okay.
If that state, for example, has a state income tax, and based on their rules for that state, you as a business owner may have to file a state income tax for that state for which you are offering goods and services.
Oh my goodness. I'm just shaking my head for my listeners. The people that cannot see my face, I'm just shaking my head in awe. This is it's stuff that I never thought about. Just like as a regular human being going through my life,
Yes.
I never thought about this, which is why I love this podcast so much. Because everyone is just living in their bubble, and the podcast allows for me and my audience to see like what is going on outside your bubble. Like all of these things are happening outside of your bubble. Okay, what is a sales tax? I'm not sure if that's the correct term that you use. Oh, a sales tax permit. Okay, what is a sales tax permit and how do you get one?
You apply through the state in which you're offering goods and services.
Okay.
So for us, it's Texas.
Mm-hmm.
And with Texas, you would apply for that permit. And what that says is that you're telling your customers that you're offering the goods and services, and you have to charge the sales tax as established by your county, whatever that rate is. And ours is 8.25%.
Yes.
And so you're required to display that by the state.
Mm-hmm.
And you're charging sales tax. Basically, you're collecting sales tax for the state, and then you remit the money you've collected to the state. And that's just the simplest way to put it. Each state may have some additional regulations to follow. So I encourage people to find out what it is for your state and to follow those rules and regulations.
Where would they go to find out this information or to apply for a sales tax permit? Do they go to like their county?
State, their state website.
State website.
Their state
Okay.
website. Ours for Texas is the state comptroller's office.
Okay.
And if they go on the website, they can apply, they establish an account and apply for a state permit. And they can print the provisional permit right online, and then they get a hard copy in the mail.
What about international sales?
So if you sell internationally, whether you are a non-resident or not, if you have a place of business in the United States, a brick and mortar, and you're selling products in the United States,
Yes.
then yes, you are subjected to pay sales tax to whatever state that you sell in, if you meet that threshold, or whatever your state requirements where your business is located.
And is it the same thing for international sales?
Yes.
You have to meet their threshold and pay them.
You pay us for our goods and services that you sell here. It doesn't matter if you sell overseas.
Mm-hmm.
For us, you still indicate, did you make any foreign sales for Texas, when you apply, when you file your monthly or quarterly sales tax report? That's one of the questions that you ask. What are your international sales?
Okay.
And so you pay sales tax on that too. But I do know that if you do international sales and your business is based here in the U.S., yes, you pay sales tax to the respective state of the U.S.
As a small business or medium-sized business, whatever you want to call that, when do you send W-2s and is it 1099s to your employees? When do you send that to them? And what conditions have to be met for them to fill that out? Because is it like $600? Like if they make under $600, they don't have to fill that out? Or am I completely wrong here?
Now that's a different area.
Okay.
So for W-2s, for employees, you are required to have those mailed by January 31st.
Okay.
1099s are who you pay to self-employed persons or vendors. 1099 recipients are not employees. So that leads me to, and this is a whole different podcast, who is an employee and who's not. So to just keep it simple, since this is not that podcast, if you are telling a person what to do, you're controlling what to do, how to do, when to report to work, that's not a self-employed person. A self-employed person is a person that owns a business. And if they own a business, they're to invoice that person, and that person pays an invoice. And that constitutes our 1099 NEC.
Okay.
But there are so many other 1099s for interest, but all of those have to be in or to the person by January 31st.
So it really does not matter, and I'm thinking of the 1099s, it really doesn't matter how much you pay them. Is it the intent and the situation again would determine?
Is if you have a contractor and they make $600 or more, then you issue them a 1099 NEC.
Okay.
But all 1099s, the series of 1099s, miscellaneous, interest, INT, dividends, I mean there's a lot of them, several. Those have to be issued to the individual by January 31st.
Okay. What are the different tax deadlines for corporations versus sole proprietorships?
And that goes back to the March 15th deadline for corporations, and then individuals, sole proprietorship, or LLCs choosing to be taxed as a sole proprietorship is April 15th. So March 15th is corporations and partnerships. I forgot to say partnerships.
Okay. Let's see here. What is some advice? You said you've been doing this over 30 years. What is some advice for small businesses that you can give to help them stay organized with their taxes and the income tax and the payroll tax and FICA and receipts? Because you got to turn in receipts, right? What's some advice that you can give small businesses, small organizations to help them stay organized with all of that?
I would say schedule yourself an administrative day to take care of your paperwork, to keep your receipts, to organize those, copy those, automate whatever you can automate. There's so many companies now that you can get a receipt scanner. You can have receipts sent to your email, and you can upload them into different various apps. At the time, if you have a administrative day, one day a week where you can go back over some of your paperwork and stuff and indicate if it's mileage, keep up with a mileage log. If you're traveling, there's various apps that will do that for you. You want to look for an app where at the end of the year you can print a report, and you take that report to your tax professional, CPA, tax accountant. You take that to them, and then get some type of, if you can afford to, I mean, some people still use Excel to track your expenses and your mileage, your expenses, how much money you're making. You just need a work day where you got some time to just focus on the business aspect. Small businesses normally, that owner wears various hats. So their operation, their manager, their business personnel on the back end, their bookkeeper, and get to a place so you know where you are financially. What are your financial picture? What are your financial goals to get to a place to relinquish some of those responsibilities and duties to someone that you would pay or outsource if you're able to do that. But if you're just starting, it's hard to do that because of funding.
Yes, absolutely.
But every person needs an administrative day where you're just focusing on the business, not operations, but the business, the numbers. Do you know your numbers? Focusing on that aspect.
Okay. So we have a few more questions,
Okay.
Ms. Karen, then we're gonna wrap it up here. And I just want to thank you so much for keeping this simple. Keeping this simple for me in a manner, in a way that I can understand more about taxes and tax law and tax code and different things like that. How can a business owner check the status of their tax refund? If they're getting one, if they're not getting one?
That's an individual.
Okay.
If an individual is receiving a refund, it's irs.gov,
Okay.
where's my refund?
Okay. Do businesses get refunds?
Now, S corporation is considered what's a pass-through entity. So the corporation will report whether it has a profit or a loss, and that passes down to the individual member. So that passes through and gets included and taxed as, keeping it simple, ordinary income
Okay.
on that individual 1040 tax return. Corporations is its own person, so all of the profits and losses are retained in the corporation. And so if there are dividends or whatever passed out, the corporation will give those to the shareholders. And this corporation can pass some of its profits down to its members as well, called a distribution. And there's some specific rules and conditions that applies to some of that, but just to keep it really simple.
Oh, go ahead.
Just to keep it really
Oh, okay.
simple. So of course, go to the IRS website or consult with your tax accountant or CPA, tax professional, for those other conditions.
Nonprofits, as I understand it, please correct me if I'm wrong, do not pay taxes. So we're talking like churches, food banks, like shelters for
Right.
they don't pay any tax.
That's correct.
Correct. So do they have to file taxes if they don't pay any taxes?
They do, because it's a public entity. So you're collecting public funds and you're filing a return. so that the public knows what you have done with the money that you've collected. Now,
Okay.
determining what they file again is according to how much money that they've collected. So if it's under, I want to say 50,000,
Mhm.
then the 990 EZ, which is like a little postcard, is what they file. But nonprofit records, their tax filings, their books are open to their board members or anyone that contributes to them. They have to be accountable for the money that they have collected, the fundraisers that they collected,
Mhm.
and then how have they spent the public money to keep their nonprofit status.
Now, this one is solely, I just want your opinion.
Okay.
There is, and I'm sure you've heard this, an uproar, especially with mega churches.
Mhm.
They do not pay taxes. These huge mega churches that are getting millions and millions of dollars in. What is your opinion on that? Do you think mega churches or churches in general should have to pay taxes?
No, I don't think they should.
Okay.
I think that a church is a non-profit
Right.
organization, no different than any other non-profit organization. Churches employ people,
Mhm.
and those employees, if they're W-2 people, they are still collecting and forwarding over the money that they're collecting from the employee, depending upon the position.
Okay.
That's another whole different podcast.
I'm gonna have to have you back on here like 5 more times. Okay, so my last couple questions for you, Karen. You have been doing this 30 plus years. Today, what would you say is your personal intention in the tax space? What is your goal in this space?
To continue to educate the existing client base that I have and any new persons about tax law. I think that if you know what the rules are, you can plan better depending upon your tax situation. So it's always an opportunity not just to do this as a profession, but part of the profession is to educate. And once you educate, you empower people on how to face their situations better because they're able to plan better.
Absolutely. Or are you accepting new clients or are you booked up?
No, I'm always accepting new clients.
And the name of your company, so if people want to speak with you about their taxes or have more questions outside of what we discussed on the podcast, what is the name of your business? And they can, I'm sure, Google you.
On Time Bookkeeping and Tax Services. Our number
Excellent.
is 409-833-4345.
Excellent. Thank you so much
Thank you for having me.
for being on this podcast and keeping it simple. Thank you.
But again, I still advise strongly that you talk to your tax professional, your CPA, your tax accountant, and ask critical questions. Go to the IRS website, irs.gov, to retrieve valuable information that's there. It's there. And then you reach out to your persons. Always seek someone that is willing to continue their education in this subject because tax is so vast and it changes daily. So you want someone that is up to date, that is willing to keep learning in this area.
Absolutely, absolutely. My final question for you, who do you think would make a great guest on the podcast, but you have to help me get them on?
David Wright of Unique 1.0.
Okay, and what does Mr. Wright What does he do?
Audio retail, customized audio speakers, cars, for your car, just lights, you name it. He is a wonderful business owner and would love to do this podcast.
Thank you. Thank you so much. And to my listeners and my viewers, thank you so much for tuning in and watching. You can get Miss Karen's podcast on YouTube Podcast and Apple Podcast, and you can get all of my other guests on those same platforms. And remember, you always have time to listen and learn on the go.
Enjoy the ride with Crystal Petrie Console.